Hey guys, I know I'm not there today. Um, Things are not going well health wise for my wife. We just came back from hospital, so I need to take care of her. I need to take care of my kids. So I'm sorry I couldn't be there at school today. Having said that, though, we only have a few months left of the school year, and it's only a few months left until your GCSE exam. So I'd prefer it if I didn't waste any time in regards to you completing the course. So with that in mind, I figured I'd create this video for you to help you understand the new topic that it is that you need to look at, which is cash flow forecasts. Now, we do actually need to continue with internal and external sources of finance, but I'd rather do that with you guys while I'm there in person. So for now, I'm going to teach you this new topic, and it's actually very simple. So we can get on with that today while I'm away. There's a bunch of activities that I'd like you to do as well regarding this topic. So I'd like for you to do that in my absence. So how this video is going to work, it's simple. I'm just going to go through the content with you. I'm going to go through how cash flow forecasts work, how what's the difference between an inflow and an outflow, and how to calculate net cash flow. So those are the two things that we need to look at today. What are the differences between inflows and outflows, and how do we calculate net cash flow? So to begin with, well, let's start with inflows and outflows, okay? Let's see if my editing skills are any good. I'm gonna put an inflow over here, the definition of inflow. An inflow is any money that goes in to a business. Now, it could come from various different sources, but the crux of it is that any money that goes into the business is considered an inflow. Now, I do not want you guys to confuse inflow with profit, because inflow is not profit. Inflow is only whatever money comes in to the bank account of the company, whether it is from revenue, whether it is from sales, whether it's from an investor putting money into the account, whether it can be any of those. Even if it's maybe, a loan from the bank, it's money going in to the account. So that is an inflow. And as you could probably guess, an outflow is any money going out of the business. So any money that goes out of the business is considered an outflow. And obviously, I'm sure you can think of a few examples: wages, costs like maintenance, interest on loans. Any of those is considered an outflow. Now, the only way that you can differentiate between an inflow is that whether it comes in or whether it goes out. But there is another thing that you need to look at. When we're looking at inflows and outflows, we're looking at strictly what goes into the bank account. So debtors are people that owe you money. So if someone owes you money, that means at one point they need to give you the money that they owe you. But whatever they haven't given it to you yet, so it is not an inflow yet. Once the money comes into the bank account, only then can you consider it an inflow. So, for example, if you've made a sale of 1,000 dinars and you've received only 50% of it, then your inflow is only 500 BD, right? Let's assume this is your bank account, okay? So whatever goes into the jar over here is an inflow, and whatever goes out is an outflow. So let's say you've paid for maintenance. There's your payment to maintenance, gone. Let's say you've paid for wages. There's your money, gone. And then you've paid for interest on a bank loan. There's your money, gone. So you see, the pot is becoming smaller. Well, I mean, this is huge, but you know what I mean. So whenever there's an outflow, money goes out of the bank account. However, when you're making a sale, like for example, you've made sales of 10,000, it goes back in, right? Or if the investor of a company has decided to put some money into the account, in it goes. Now we have some money in the bank account. So the point of a cash flow forecast is good for banks to get an idea of what your sales projections will be. So that can help you get a loan, for example, so that you can expand into the business. But there are other benefits as well to the cash flow forecast, in that it'll help you predict how you will do in the future. The only issue, well, one of the main issues with cash flow forecast is that you do not know what the actual sales figures are going to be. It's actually just a prediction, because that's what a forecast means. Forecast means prediction. So you do not necessarily know if your data is accurate or not, right? So the first task that I want you guys to do is that if you go on Google Classroom, you'll notice that I've added a new section, chapter 23, which is on cash flow. Open the PowerPoint presentation and please go to slide number 5. So in this table, I want you to write down whether or not you think it's a cash inflow or a cash outflow. Okay? And after you're done, share your answers with your neighbors or the other people in the class to see if you've gotten the same answers. So that is part 1. Now we'll go on to part 2. And after this part, you guys can go on and do all of the work by yourself. Now the part 2 is about net cash flow. So net cash flow is basically the difference between your inflows and your outflows. So if I have a bank account over here, right? And my inflows are this, right? So this is the money that I have earned over the course of, let's say, a month, right? So not bad for a month. Made some good money, right? Good sales. However, we now need to pay our costs. So if this is our inflows, now we need to pay for the outflows. So let's see. Again, same outflows, right? Wages, gone. Electricity and rent, gone. What else was it? Let's think of another cost here. Maintenance, gone. Right? Let's say that's all our costs, okay? If that's all our costs, this is our net cash flow. Now, how did we calculate that? Inflows minus outflows. That's how you calculate net cash flow. So that's the best way to do it. So calculate all your inflows first, and then minus it by all your outflows. And that will get you your net cash flow. Okay? Now, if you go on the same, if you go on slide number, let's see, what slide number is it? Slide number 7. I want you to calculate the net cash flow of this company, okay? Calculate calculate the total cash inflow and calculate the total cash outflow. All right? After you've done that, there is another question in slide 10 that you can do, which is also where you have to calculate net cash flow. Just be aware of what figures you should use and what figures you should not use. Remember, cash inflow only goes with what goes into the company. If it hasn't gone into the company yet, meaning it's on credit, as in you'll pay later, then it is not an inflow yet. It will be, but not now. All right? So, slide 10, do the assessment. If somehow you manage to finish both of that, I will upload a worksheet where you can just continue calculating net cash flow. Remember to always study your definitions, do the net cash flow exercises that I've given you, and make sure you know the differences between an inflow and an outflow. All right, guys? That's all I ask for you to do tomorrow. I hope you guys find it easy. It's really not that difficult if you put your mind to it. I hope this video helps in some way. I'll be back on Tuesday, so if we have a lesson on Tuesday, I'm not sure if we do. We'll meet up then. But good luck with the work. Please try and finish it tomorrow, okay? Make use of what little time we have left so that we can finish the course as soon as possible. All right? And now that I think about it, I'm probably not going to do any of that video editing nonsense. All right, so take care, guys, and I'll see you on Tuesday, all right? Take care, guys. Peace.